Netflix stock is down more than 20% since its earning. Why is Netflix stock dropping and will Netflix stock go back up? In this video, I'll be sharing with you my Netflix stock analysis and whether is Netflix stock a buy now or should you sell Netflix stock. Before we begin, if you are new to this channel, my name is Linus, and in this channel I share all things related to the stock market, so both investing and trading. So if you want more videos such as this, make sure you subscribe to my channel because each week I release 2 new videos about investing, trading and the stock market. Alright, so let's first take a look at the overview of Netflix 4th quarter earnings. So if we scroll down over here, we see that for Netflix earnings per share or EPS, earnings per share for Netflix was $1.33 versus 82 cents expected. So for the earnings per share side, Netflix did beat expectations. The next one we'll take a look at is revenue. So revenue for the 4th quarter for Netflix was $7.71 billion versus $7.71 billion expected. So Netflix Q4 revenue was in line with expectations. As for global paid net subscriber additions, Netflix gained 8.28 million subscribers versus 8.19 million expected. So for the 3 main metrics, Netflix beat 2 out of 3 expectations. So why then did Netflix share drop by more than 20% after its earnings was released? Because remember, the stock market is a forward-looking mechanism. So investors and traders only look towards the future and not the present or the past. And for Netflix as a company, investors and traders are a bit worried about its future. Because if you take a look over here, in its earnings, Netflix mentioned that the increased competition from other streaming companies such as Apple and Disney was one of the reasons for the slowdown in its growth. And this is something that a lot of investors and traders don't like. And the reason is because in the past, Netflix didn't acknowledge the increased competition from Apple and Disney. But in the most recent earnings, Netflix did brought up the increased competition from these companies. And the way that most investors and traders see this is that Netflix is under increasing competition and Netflix is feeling the heat of the increased competition and they are finally acknowledging about it. So that was one of the reasons why there was a sell-off in Netflix shares after its earnings was released. And if we take a look at this statement released by Netflix, Netflix mentioned that consumers have always had many choices when it comes to their entertainment time. Competition that has only intensified over the last 24 months as entertainment companies such as Apple and Disney all around the world develop their own streaming offering. Netflix further mentioned that while this added competition may be affecting our marginal growth some, we continue to grow in every country and region in which these new streaming alternatives have launched. So we see here that Netflix is finally acknowledging that there's increased competition in their industry and space. And this increased competition is likely to affect their growth rate. So while Netflix Q4 2021 earnings has been relatively good, its future outlook is not as rosy, and that is why Netflix share has plunged more than 20% on its earnings release. Now let's take a look at Netflix stock chart. So over here on earnings day, we see Netflix stock gapping down and plunging down by more than 20%. But even before earnings was released, we already had some warning signs on Netflix stock. And the main warning signs were the moving averages. So if you guys have been following me for quite a while now, you know that I follow the 50-day moving average and the 200-day moving average. So in this case, the 50-day moving average is the red line and the 200-day moving average is the black line. So over here, we see Netflix stock breaking below the 50-day moving average. So that's the first warning sign. And then after breaking below the 50-day moving average, Netflix stock continued to decline and even broke below the 200-day moving average over here. And that was the second major warning sign. So when a stock breaks below the 50-day moving average and the 200-day moving average, typically it's a warning sign to get out of the stock. And as we see after that, not only did prices break below the 50-day moving average and the 200-day moving average, on the earnings day, Netflix gapped down by more than 20%. So even before Netflix stock gapped down on its earnings, we already had some major warning signs. And this is not to say that I can predict stock prices because no one can predict where a stock is going to head to. But if you are able to analyze the price charts correctly, price charts can tell you a lot of things. And in this case, Netflix price chart gave us warning signs even before the earnings was released. So the question now is, will Netflix stock go back up, and is Netflix stock a buy or a sell? Okay, for me personally, I wouldn't buy Netflix stock right now. The first reason is because Netflix stock is below the 200-day moving average and the 50-day moving average. So when a stock is below the 50-day moving average and the 200-day moving average, we say that the stock is on a downtrend. And we always want to invest and trade with the trend. So if I'm going to buy Netflix stock, I want Netflix stock to be on an uptrend. And that means that Netflix stock has to be above both the 50-day moving average and the 200-day moving average. So that's the first reason why I'm not buying Netflix stock just yet. Because it's below the 50-day moving average and 200-day moving average. The second reason is because of this gap down over here. So usually when a stock gaps down, there's something wrong with the stock that causes many investors and traders to quickly sell the stock at a loss. Furthermore, for Netflix is a big company. So for Netflix stock to gap down by more than 20% on a single day, it means that it's not just retail investors and traders selling the stock. It is also big institutions selling Netflix stock. And this is confirmed by the huge selling volume on this day over here. So when big institutions sell their stock, it means that the stock is likely to decline or at least move sideways for quite a bit of time. And that is why for my personal investing and trading, I would not want to buy Netflix stock just yet. Because right now, there's a higher probability that the stock will move sideways or decline in price. So in the first scenario where Netflix stock moves sideways, while I'm not necessarily losing a lot of money, I'm tying up my capital in a stock that is not making any substantial returns for me. So in the first scenario, I'm losing my time value. In the second scenario where Netflix stock continues to decline, it means that I'm losing money. So for Netflix stock, there's a high probability that I will be either losing time value or my money. And that is why right now I'm not looking to buy Netflix stock just yet. Take note that my investing and trading style might be different from yours. So the key for you is to find a style that suits you, and then you make your investing and trading decision from there. So hopefully you have learned something from this video. If you did, smash that like button because it really helped the channel grow and allow me to produce more content such as this. And if you want more weekly stock ideas and tips, make sure you join my Facebook and Telegram groups. I share the stocks that I'm taking a look at every week on those groups. So you can join those groups by clicking on the link that I included down in the description below. I'll see you in the other videos to your financial success.